senior consultant with Buzal in Hamilton. It's a company from the United States, also Chemonics International, working in Southeastern Europe. But also I was working for 8 years in southern part of Africa, Zimbabwe, and Republic of South Africa in HK Engineering for the infrastructure projects, airports, roads, and water supply. And I have more than 20 years experience and working as an owner of small consulting company, managing year over business growth, and also evaluated implementation of integrated asset management in more than 90 public water utilities in Southern Europe. As I said, I'm located in, I'm presenting from North Macedonia, which is a small country in located in above Greece and then on east Bulgaria and on west Albania and on north Serbia. And I would like to know where are you all currently located? So if we can have a first Mentimeter, please, Rona.
Coming right up.
Hello? Do we have glitches again? Do we have problems? Okay, here we are. Claire, can you comment? We have persons from Greenland. Unbelievable. Yeah.
Yeah, we have people tuning in from all the way from the top of the Northern Hemisphere down almost to the bottom of the Southern Hemisphere. Not to the bottom, but a lot of people from, quite a few from Europe.
Mm-hmm.
Can't tell how many responses we have. Doesn't look like too many if it shows the number. Let's see. Yeah, so if you haven't pinned your location yet, please go to the chat, go to the link and paste it in the chat box and just pin your location, your current location on the map.
Most of them, they're coming from Uganda. Yeah. And then Tanzania. You can see some people from South Africa, Angola. Yeah. Excellent.
Looks like we have good representation from Tanzania.
Yeah. As we expected, more
to you, Vladimir? Yeah.
No,
as expected.
As we expected, more of them are from Africa, central part of Africa, southern part, and also from, I think, Morocco. We have there, but also we have some people from Europe, Canada, Greenland, Malaysia. Okay, excellent. Thanks. So, shall we continue now?
Yes, Vladimir, please continue.
Yesterday we had an excellent presentation, and we should recap. We should remember what we have done yesterday. Thanks for Ajit for excellent presentation. We saw why the asset is very important. Asset data, actually, what the data do you collect for your assets, and how to set up asset information system. Before we dive into the online solution dialogues topics today, and we should remind us what we have learned yesterday or presented by Ajit. Developing a valuable asset management information system is extensive and often costly process, very costly process, and a long process that requires a long-term commitment, not only by asset management team members, but also all involved in continuously improving services performance in aspect of reduced operating cost and improved organization functionality. Furthermore, it's a process that requires data. We saw the importance why the asset data is very important. So the information results are the results as just as good as the data inputs. So we saw that all the steps required for developing asset register database. First, we saw the first step of how to get organized and assemble asset management information team, and then Ajit presented established how we should establish an asset register hierarchy, and this is for your homework and also as a part of the asset management action plan. On a step 3, we saw the plan the data collection. It's a very important step before you start any collection of the data of your assets in your municipality. Then you should make a plan who should do it, when should do it, and how, what tools are necessary, and timeline to collect all the data. And then the 4th step is actual collection of the data, either from all the documents or on-site connection of the data. And the very important step is number 5. When we validate the data, is it how accurate or inaccurate are? If there is inaccurate data, then we have to go back to the planning stage and to see where we have why we have inaccurate data, and then start it again for collecting from the documents or from on-site visits. On the end, if we have, let's say, satisfactory, accurate, and reliable data, we go to next step for establish asset register, which is, let's say, solid base for the further asset management information system. But it's very important then to continue maintaining and updating asset management data register, and which is a continuous process. So that's why I said it's very important to have this as a continuous process. We'll go through the Zoom poll now. Can we have a first Zoom poll? So I would like to know which of the steps from the previous excellent presentation from Ajit for setting asset management information system has enhanced your knowledge about the asset management information system. Claire, back to you. Thank you.
Sure, thank you, Vladimir. So up on your screen, you should be able to see a poll. Question is, which asset management information system the development of that system, which step has enhanced your knowledge about infrastructure asset database development? So right now, the leading answer is how to plan data collection. So that would be step 3 in your chart on the slide. We're also getting now lots of responses for how to design an asset register hierarchy and how to collect and capture data. Encourage those of you who haven't voted yet to answer the poll. So it's pretty, numbers are pretty even among the top 5 steps. Looks like how to design an asset hierarchy.
Yeah, that's
is the most.
Yeah. It's the same system, like built. Yeah. It's a management tool where it break down structure. Also, the financial managements and accountants are using this tool also for developing chart of accounts, and but it's also used in especially in asset management, developing the asset register. Yeah.
I think the exercise yesterday of starting to design your asset hierarchy for a priority asset is fresh on people's minds. Yeah, so we have about 70% of votes in. Yeah.
Which is a good vote, yeah. Yeah, as expected. Isn't it clear? Hierarchy, yeah. But most, all of the topics or steps are very important for when developing asset management information systems. So especially planning, data collection, and the others, actually validating data. And it's very important for stepping into the next step, how to do the analyze the information needed for decision making. So we're going to close the poll now and go to the next slide, where we're going to, okay. So today we'll go through 3 main topics listed in slide. Its first topic is analysis of asset information and utilizing data for strategic, tactical, and operational asset management. And first topic is needed for strategic, tactical, and operational. And why is needed? Information is needed for decision-making process that are associated with each of these analytical stages in order to know the asset value, which is very important. We have to know and determine what the value of our assets are. Then to list the critical and priority assets for renewal or replacement. Not only critical, but also risky assets. Also, it's very important to determine the next step is what assets to create for acquiring new and when will have to acquire them. And also, it's very important in case of renewal or replacement, when we have to renew or replace our assets, which are critical or risky assets. Then on the first topic, we will ensure that required performance during the asset's useful life by setting out maintenance management procedures. It's very important for the non-critical assets, which are to continue with the type of management, maintenance management procedures. How are we going to how are we going to maintain our assets in the future? And on the end, it's needed for managing both decommissioning and disposal of our assets as the latest stage of acquisition cycle. Before hoping to understand what information is needed, it's important to understand why asset information is needed. Without this, it can become a case of information for information's sake. And we don't do that. Information is needed to support one or more defined local or government business process. For example, on a strategic level, information will support the strategic objectives of our plans. For example, it measures or increase municipal infrastructure level of service, or drives of safety, enhance infrastructure performance, environmental or regulatory requirements. On a tactical level, this information supports tactical policy development. For example, data and information to support analysis of infrastructure renewal of roads, when to renew or when to replace, when we knew when we require new medical equipment or potable water quality. Those are technical policy development indicators, or how to define the asset maintenance intervention policies in the future. On operational um, stage, we need to deliver assets related to through the effective efficient scheduling for resources for maintenance. We knowing that all the public utilities and municipalities, they are short of human resources and also financial resources for maintenance of assets. But it's very important to know how the efficient scheduling should be. For example, water supply asset location data, it's needed when to perform maintenance of work on site and to see and to find exactly the pipes are needed for maintenance, or if there is a burst of pipe and losing water, potable water. These stages, excuse me, for decision within them are not insulated. Decisions will have to impact on the later phases and will be affected on constraints of subsequent phases. It is important that local or national governments consider and analyze asset life value. When we say about assets life value, the service during the service life, what's the value of the assets are, their cost, risk, and benefits that will result from this decision throughout the asset lives in order to maximize value from the assets. On the second topic we're going to discuss today is to see what are the composite indicators for measuring municipal development infrastructures and municipal development index. And also we'll see the appropriate key performance indicators for information quality and accuracy of data for our asset management policies, monitor and evaluate asset management action plan and financial or capital investment plan. On the third topic, we're going to see and repeat actually from yesterday what are the information technology systems available on the market and how we should start. We should start on very basic using Excel's, and that's a recommendation, Excel or very simple database software tools. And appropriate use of information technology for asset management information system can make a difference, make a huge difference and significant difference in the way of infrastructure assets are operated and managed. Even a simple software applications like, as I said, Excel spreadsheets and database software can store and perform data analysis. For today, for this presentation we have prepared together many Excel tools for, let's say, how to calculate depreciation of the assets using an accounting system. Also, how to evaluate, how to establish, how to assess the risk assets and prioritize risk assets, and also software for developing asset management plans, financial plans, and capital investment plans. So these four, let's say, templates will be presented on the end of the session. Now we have to go for the Zoom poll, please. Can we have the second Zoom poll? And I would like to know your background because we're going to have a lot of calculation today. And what is your background? Claire, back to you.
Thank you, Vladimir. So please answer the poll that's popping up on your screen. It's asking, what area of asset management are you involved in? So we're getting a lot of answers with engineering, people with engineering backgrounds, work in finance, planning, about 4 to 5% each for community health, information technology, consulting, training. So 75% voting. Yep, I think engineering is in the lead and it's pretty evenly split after that between finance and planning. Engineering, finance, and planning.
Yeah, we can end the polling now. I'm glad to see that there are a lot of colleagues in engineering, civil engineering, probably mechanical and electrical, and but also we have in planning or finance, which is the topics we're going to discuss today. But also we're going to have a health hospital examples or health asset examples and how to calculate depreciation for equipment, for medical equipment, and determine the risk assets in one hospital, in local hospital. Yeah. So thank you very much for your polls, and we can close now and move on to the next topic. The first one is analysis for asset. First topic is analysis of asset information and utilizing data for strategic, tactical, and operational asset management. And it's the overreaching goal of the asset management information system is to develop a framework of integrated decision support needed for the decision makers, usually our mayors and let's say ministers on the government level. So we have to provide right information for the decision support to our top decision-making officials. When doing that, we have to take in account internal factors that will focus on reliable data. Without reliable data, we can't produce any information for decision making. The link between municipal departments, it's also needed as internal factors, how exchange of the data and information in internal municipal departments or public utilities at the local or national organization strategic objectives, risk analysis and integrated performance measurement of the organization. Those are all internal factors. External factors are our focused on relevant stakeholders, end users, and targeted communication to stakeholders, and the creation of social added value and sustainable solutions. We have to include all stakeholders in the process for developing or communicating and developing information and communicate with all relevant stakeholders. And also we have to take into account future developments, which is with the focus on increased stress on assets. Are there an adoption of new technologies, changing demography and patterns of various asset systems and demands, for example, water demands, transport demands, healthcare and education, etc. Excuse me. Within the framework of asset management, asset valuation is used to calculate the current and future asset value, not the past, but we as an asset managers, we have to calculate future asset values of our assets. This is the most and the first information needed for any asset management information system analyst. First, we have to see what's the value of our assets today. Whenever software tools or methodology is used, it must be based on past values and historical, as we said, we're talking about historical values of the assets. Then can be predicted some degree of accuracy for the future. Therefore, let's see how the asset depreciation and how it's calculated for in terms of accounting system. What is depreciation? Depreciation refers to the annual loss in value of infrastructure assets over time due to their physical deterioration of the assets, worn out of the assets. The accounting or financial definition of this term relates to the expected service life and infrastructure assets. And depreciation may be calculated on a basis of equal loss in value for each year, or as a percentage of the asset value at the start of each year, which is the linear depreciation, line 1, as you can see it on a graphic on the right-hand side. We have the asset value, which is a purchase cost on the beginning when we purchase the asset item, and we have equal distribution of the depreciation towards the time when we reach the salvage or residual value. Maybe it can be zero or some amount, which we have to count for and estimate the value of the assets. The second line, actually, we have which is called that's the second type of depreciation, which is accelerated depreciation. And usually the values of depreciation, its values are very high at the beginning of the years, and then slowly decreasing toward the end of the useful life of the. And the third one is, for example, if we don't use for the long period of time, we build, let's say, the road, and we don't use it for the period of time, but calculations of the depreciation, it must be calculated because it's losing a value if it's standing and not used. And only when start using it, then start depreciation and losing value. Let's see when we don't calculate the depreciation. Let's switch off the laser. Let's see when we don't calculate depreciation. Depreciation is not calculated for constructed assets without required technical documentation. Engineers knows very well if there is no without technical documentation and let's say permits for operations. If we don't have it, we don't start calculating depreciation, even if it's there, if it's built or whatever. Depreciation is not calculated for assets operated economically in use for a long period of time. Maybe we don't have to calculate, but it's useful to see even if it's small amount of depreciation, it could be, let's say, omitted. Certain intangible assets like computer software we don't calculate for it. We don't calculate the depreciation. The question is always asked, does the land, do we calculate depreciation of the land? I haven't seen that the land depreciates or losing value over time. The land has a market value, so we don't calculate the depreciations of the land. Incorrect calculation depreciation and inability to recognize seemingly improved functioning of the organization and delay to pay the actual cost of capital maintenance until the total breakdown of the infrastructure system will result in increase of accumulated expenditure. Now, let's see what do you think? Upon expiry of the asset life, useful life, or service life, we have accumulated depreciation. Do you think that these expenses should be used or could be used for procurement or purchase the same or similar assets? Can we have the Zoom call, please? Voila. Thank you. Claire, thank you.
Yep, so we have another poll. It's a true or false for the statement, upon the expiry of an asset's useful life, accumulated depreciation should be used for the purchase of the same or similar asset. Is this true or false? So it's it's evenly split for a moment there, but now 2/3 of responses are saying false. Upon the expiry of an asset's useful life, accumulated depreciation should be used for the purchase of the same or similar asset. Is that true or false? So around 60%, so 60-40 split for false. Vladimir, do you have a comment on that?
Yeah, I was expecting this these results, but if we have time, can we hear from some of the participants who says that this statement is false? To say why did they think that this statement is false? Do we have time?
We can have some people explain in the chat, and if I see any response, I can shout it out. Someone has commented, the funds will not be enough to get a similar asset.
Correct. It's not expected, but maybe most of the part. Yes, I expected these results, and depreciation is part of the tariff or tax structure allocated for operations which are determined, and municipalities get revenue from these tariffs or through sending bills or paying for the water and paying road tax, and during the registration of cars, let's say, it's that tariff structure. Depreciation is calculated there, so it's part of the income or revenue of the municipalities or public utilities that covers depreciation costs. Therefore, it's recommendable that accumulated depreciation should be used for purchase the same or similar assets. I agree, not 100%, but let's say 60 or 70% of the accumulated depreciation saved. I mean, you can't see it, but the cash is there. It shouldn't be used for, let's say, new employments or buying a new cars for the mayors or things like that. But it should be used for future improvement or replacement of the assets. Depreciation is a process of allocating the cost of tangible assets over a period of time, rather than deducting the cost as an expenses in the year of acquisition. Generally, at the end of infrastructure asset service, the sum of the amount charged for depreciation for each accounting period will equal the original cost on the salvage value. So, there is the amount needed for the. Let me see. Let me switch off the laser. I don't know how to do it now. Okay, so. Somebody just
Cannot see your presentation.
Okay, now it's okay. Yes, we will go to the
Still
next
can't
slide.
see your presentation. We still can't see your presentation, Vladimir.
Okay. Okay, it's coming up now. Sorry, wrong button. Yeah, sorry. We go to the next slide, which is depreciation methods. For financial and accounting reports purposes, there are 5 common methods to calculate depreciation, which are listed here in the table on the slides. And each will vary on complexity of factors. These methods are used for accounting purposes only. We can see the first is a straight line, which is the easiest method to calculate. Simply divide the asset basis by its useful service life to find the annual depreciation. On the second column, there is how it's calculated, what is the formula. And it's simply, for example, if we have a asset cost, purchase cost of $100,000, and the expected service life is 50 years. If we divided 100,000 by 50 annual rate for depreciation, and it's equal, it's 2,000. So it's very simple method. Most of the infrastructure, this method can be used for the roads, bridges, or water supply, which have a long period of service life, let's say more than 15 or 20 years of service. So straight line, where when you see the excuse me, when you see the formula, asset cost is procurement cost or historical cost of renewal of replacement. So a residual value, it's the value of the asset remaining after its service life. It could be zero, or we can estimate what's remaining value or the value of our asset after expiring, let's say 10 or 15 or 20 years of service. Service life is the number of years which an asset is expected to be in service. So in handbook, in our handbook, you can see the table of various asset types and various categories, and there you can find exact or estimated expected service life for various types of asset infrastructure assets. Under the second one, diminishing or declining ballast, when you can, some in the literature you can see diminishing or declining ballast marked with DB, is the diminishing declining ballast. You will take for book value of an asset and multiply it by the straight line depreciation rate. We saw how the straight line is calculated, and then multiply by the amount desired for depreciation rate. It can go up to 200%, let's say 20, 40, or whatever. For that, when we calculate double declining ballast, then we can use 200%. In a formula, book value is the asset cost minus accumulated depreciation. And accumulated depreciation is equal to total amount of asset cost that has been allocated to depreciation expense or manufacturing overhead. Um, the formulas are, even I don't know by heart, but that's why we have access to calculate. These accelerated um, depreciation methods, accounting depreciation methods, are used for applications of infrastructure assets like ambulances or trucks or X-ray machines or medical ventilators. They're using the value very quickly in the beginning of the year. And double declining balance usually is used for computers, laptops, mobile phones, and things like that, which they use very quickly on the first or second year of using these assets. And there is another one which we can use for, excuse me, for the roads and bridges or water supply system. It's called sum of the year's digits, which depreciation is also accelerated depreciation method, allocating the higher amount of depreciation to the year at earlier years and then of service life and lower amounts towards the end. It is also, but this also can be used for assets to a long period of service life. It's recommendable for using this method for, let's say, our infrastructure, roads, bridges, than straight line. But it's more complicated and very calculating by calculator. It's very difficult. Whereas some of the digits, how it's calculated, which is we use the service life of asset, which is n squared plus n divided by 2. For example, if we have a service life on an asset 10 years, 10 years on square is 100 plus 10, it's 110 divided by 2, it's 55, which is digits, the service sum of the year's digits. And then we multiply that for the first, second, and third year plus the multiplying with the book value from the previous year. And on the end, it's very interesting and very accurate method for some of the units of production where we have assets where we can see the production when we use for equipment, medical equipment, or windmills, let's say, wind power stations, and let's say trucks, where we can find or know the units of production. Where the other four methods use depreciation using time to estimate how much value an asset has lost. The units of production depreciation method takes into account the amount of activity of the asset, actual expenses during the year. For example, we know how much kilometers our truck or ambulance vehicle has passed for 1 year, and then we calculate it. The units of production depreciation method, it's useful for assets that are greatly affected by physical use or output. For example, during this pandemic, we can know and predict, let's say, if we're using respirators heavily used, we are using heavily respirators in the hospitals, and depreciation of the value and usefulness of the respirators that drop suddenly after one or let's say next year or almost we have to procure the new ones. Now we can see what are the advantages and disadvantages between these accounting methods, let's say service line and sum of years depreciation. Advances for all the straight line method is because it's very simple. The simplicity of this method makes it easy to understand and apply. And as we said, it's very easy to calculate, even on the calculator. Full depreciable cost of the assets in case of asset depreciation up to zero value or no value, or salvage value can be facilitated. Then we know for how many years we can use the service life and this asset. Some amount of depreciation charged in the profit and loss account, P&L account, every year makes it easy to compare the profits of our municipality for different years, net profit probably, and use this cash for future investments. This method is useful for assets whose usage is consistent every year. And as you can see on the chart here, if we set our tariffs, for example, it's measured on the average amount of life, then we know how much the tariff should be and accumulated depreciation. That's one of the advantages also. The method can be easily applied for the long-term assets or assets with a long service life. This disadvantages of the straight line method is when the comparison of 2 years is done for of an asset. This method does not reflect accurately difference of the level of service of the asset. For example, uh, if we have one road and used by vehicles and traffic for 1 year, doesn't reflect for the next year. So this method doesn't reflect accurately the difference of the level of service of the assets. Also, disadvantages is matching the cost of revenue is not necessarily when this method is used for long-term assets. Also, there is tariff setting differences. For example, for some of the years, when we have here, you can see on the first year, if the tariff setting is in between 5, let's say, on each period of 5 years, then it's more suitable to use some of the the depreciation method, because we're going to use this amount in our tariffs, for example, 5 years and the next 10 years. So that's why it's more suitable to use this depreciation method than the other one. But as I said, both are that can be used for the roads, bridges, and let's say water supply systems. Depreciation accounting method, declining or double declining balance, is from financial accounting perspective. The advantages are that declining balances method makes sense for assets that lose their value very quickly, like new cars or other vehicles or medical equipment. For these assets, reducing balance depreciation better matches the depreciation expense with the actual decline of fair market value. For example, we know on the first year that vehicles they lose money, they lose value very quickly in the first 5, let's say, years. But on the end, we can see it's after the 5 years, we can see, and we compare the book value and the market value, we are close to the real values if we compare to the market value. Double declining depreciation method is accelerated depreciation method, where the depreciation expense increases with the age of assets very quickly, as we can see on the slide here on the first year. If we have a, let's say, motor computer or a laptop, or let's say a mobile phones, and then depreciation on the first year it's quite high. Also the second, but towards the end it's very, let's say after fifth or fourth or fifth the value of these assets are very, very small. So either um, we dispose them or sell them. Disadvantages are for both these methods a heavy amount of depreciation in the first years. So quite often most of the assets, let's say computers or medical equipment, are used consistently over their useful life. Thus, depreciation of them as an accelerated rate that does not make sense. For example, we use computers for more than 5 years on medical equipment. Maybe we can use for a few more years, but then use consistently that doesn't depreciate or doesn't accelerate rate does not make sense. Further, it does not reflect the actual use of the asset. We can't see it. The formula to obtain the rate depreciation can be applied only there is a residual salvage value of an asset. Uh, excuse me. For all these four, let's say, methods, we are lucky that the Excel has a formula, so we don't have to know by heart. It's simple. There is a formula, SL, and then let's say for straight line SL, and there is a formula and explaining the Excel how it can be used. Also for all of them, except for the next method, the fifth one, which is sum of the units of production. And we have an example here. For example, if we have in our 2010, our local government has invested in a wind farm that cost very costly of 300 million with installed capacity of 200 megawatts and to produce the estimated total of 550 gigawatts an hour for the period of, let's say, 25. How to calculate? We have, let's say, because we have a residual value of 1 million, 300 minus 1 million, it's 299 millions, and divided by 550. Per year, we have, let's say, 54,000 per gigawatt just produce energy. So we can multiply that with depreciation expense for, let's say, by 20, if we use 20 gigawatts for the first year or the second year, then we multiply this amount, and then we can see the depreciation of the years. For example, the first year and the second year. But also in Excel, you don't have, because we don't have the formula, but it's on examples which I can show you on, I will show you on the end of today's session. You can see how it's easy to calculate this. And also it can give you the units remaining after the second year. You can see this, for example, from after the second year, automatically it will show what are the remaining units of this asset for the, let's say, wind farm. Before we go to the next activity, some recommendations. And when choosing between 5 different methods presented before of depreciation, we should consider the nature of infrastructure assets. For example, we should think about whether they become less useful useful at even years when we have a steady intervals of usage, or whether it might be idle for a long period of time and not use of it. It's recommended for certain low-value asset may be claimed as one-time expense rather than depreciated over their expected lifespan. Those low-value assets, they are valued for us, I mean for our work, but in the cost, let's say, for computers or small computers, probably we should have on the first year and then calculate and then not calculate, let's say, use straight line for, let's say, long period of time. But when you're using a computer, you can use normally for 1, 2, or 3 years. Finally, it's important to consider whether it's necessary to use complex method of depreciation or whether more simple method will be enough. When I say complex infrastructure objects or assets, for example, bridges, wastewater treatment plants, we have to think what type of asset depreciation it will be useful, might need it to be used for most accurate depreciation method. And it's also important to consider covering the operational and maintenance costs. We saw that many of you said that accumulated depreciation shouldn't be used for procurement new, but also or similar asset. But this tariffs also will cover our operational and maintenance costs. For example, on average, depreciation cost on waterworks at public utilities are estimated around 30% of the annual cost of the, let's say, operational costs. It implies that the price of tariff structure covering the depreciation cost should be at least 30, the same amount, because we have those are the expenses of our municipality or public utility. So each 10% unrealistically calculated depreciation affects the water price, the water bills, by 3%, which means that the price of water should be increased by 3%, which our end users won't like it, definitely. But if we calculate wrong, then we're going to have less revenues, and then the problem started. Next, we're going to go to individual activity now in Google Forms and ask you, each of you can think about and decide what accounting depreciation method should be used for infrastructure assets. And Claire, back to you. Thanks.
Sure. Thank you, Vladimir, for a very detailed presentation and on the topic of depreciation methods. So now we're going to go into a 5-minute individual exercise. Please click on the link to the Google form, excuse me, in the chat. And it's just a checkbox exercise. So you're going to be asked to select 2 infrastructure assets and which accounting method is most suitable for those assets. So please click the link to the Google form and answer those 4 questions. And once 5 minutes is up, we'll reconvene and call on a couple of people to share their responses and reasoning.
On the Google Forms, we have, let's say, the same 10 infrastructure asset types which are listed there. So you should choose on the check boxes. What do you think? At least 2 or 3. Which are the most suitable methods for calculating of these 10? These 10 are repeated, let's say, 5 times. So what do you think? What is the most appropriate method for these 10, let's say, infrastructure assets which we listed there? Thanks. If we have any responses, can we share? Can I stop? Shall I stop sharing my screen? Vana?
We're still waiting for responses to start coming in.
Okay, thanks. I mean, it's based on what I said before. What do you think? Yes. Are we having problems with receiving responses from the?
So far, we have 21 responses and
Yeah,
counting.
but can we see them while they're coming, or that's a problem? Yes, here we are. Most of them, yeah, straight to. Yeah, laptop computers are, let's say, for. Should you go up? Okay, straight line methods are for the, let's say, roads, which is correct. And I don't know, medical respirators are used for that. And water supply system is also the roads. So it's some of years depreciation method is very suitable for it.
I think we accidentally lost the responses screen.
Happens. Anyway, thank you for. Do we have time? Yes, we can see them. Interesting to see the accelerated depreciation methods like declining or double declining balances, laptop computers expected, yes. And let's say X-ray, of course, X-ray units, they lose value very quickly. Medical equipment also, yes. Some of the units of production, the solid waste disposal vehicles, which is correct also for the, which is the second one, I can't check. Yes, for the trucks or for the vehicles, but we should be very careful when using some of the units production. Let's say it's not the same if you don't have a, let's say, perfect condition for it. Or not maintained regularly, then you can have a wrong calculation or wrong estimation of book value or real value of the asset. Now we can close down. Thank you very much for your work. And we can go to the first breakout, virtual coffee break for 5 minutes now. Thank you very much for your work. And feel free, stretch your legs and have a cup of coffee. But you have opportunity to to introduce yourself in the breakout rooms and exchange contact information. Claire, back to you if you want to say something and advice. You can share the breakout rooms now, like
Yeah,
yesterday.
thanks, Vladimir. Yeah, you pretty much covered it. So we can have a short 5-minute virtual coffee break. We'll put people into breakout rooms. And if you want to introduce yourselves, feel free. And you can also answer a fun question. If you could speak another language, what would it be? So Juana, we can go ahead and put people into breakout rooms and we'll come back in 5 minutes. Thank you.
All right, opening breakout rooms.
Hello, welcome everyone back to the session. Hope you all had a nice break. I think we can go ahead and resume the session. If you guys would like to, as several of you already have, put your responses to our fun question in the chat. We're getting some people saying they would love to speak French, Spanish, Mandarin. Yeah, so as those answers come in, Vladimir, please feel free to continue your presentation. Vladimir, you're muted.
Sorry, thanks, Claire. Too many screens to see. And okay, thanks. Welcome back to plenary. We move on to asset valuation and see the other methods and what are they. It's not only the accounting methods for calculation of the depreciation and value of our asset. Local governments usually keep the value of their assets in their books with certain data such as acquisition or procurement value at the time of the acquisition of acquiring data. Depreciation value and net book value, those three usually they keep it in their books, financial books. But the question is the net book value, does it represents the real value of the? No, net book value, accounting value, does not represent the real value of the asset. Sometimes it leads to calculation of the underestimated value of depreciation. So asset valuation is very crucial for decision makers in order to make the final decisions. But they have to know and be aware of the real remaining value of infrastructure assets, not only the current value of the assets, but also the future and remaining value of infrastructure assets. Why it's um, important to know the real value of the remaining value of the assets, because to determine the remaining value of the infrastructure assets to assist management more efficiently to maintain it's for maintenance purposes, for decision making in case of sale or disposal, or do we need to renew or replace our assets. Infrastructure assets, in particular, civil engineering, my field, type of infrastructure such as roads, railways, water supply, sewerage networks, storm drainage, etc., are operated by municipality, by public utilities or agent or national agencies. And assets require modification to the asset management evaluation process. It is assumed that the local or government authorities asset valuation should be derived on a basis of ongoing concern and continuous process by which the economic value of the infrastructure should be calculated. There are three basic methods of asset valuation, which is historic cost, which we saw previously. Generally speaking, it's the accounting method, replacement cost, and net salvage value. We're going to discuss more today about and see the replacement cost method. Um, and we saw the history. These two probably we're going to compare, and the net salvage value. What is it? Net salvage value is defined as the reference between the cost to replace the asset and the cost to renew um, or rehabilitate or reconstruct the asset. In broad terms, there should be a certain degree of equivalence and comparable compatibility between all of them. And this choice between the methods should be largely determined by practical data availability considerations. If we don't have reliable data, none of the methods could be useful. When calculating the current or past value, is relatively straightforward. The difficulty comes when selecting the right asset valuation method. Um, what will be the useful project or future asset value using of the known methods? What are the historical in relation to replacement cost methods? The two most commonly used methods for asset valuation are historical, which we saw accounting, or the book value, and replacement cost. Both of these methods are backwarded, looking for the historical cost, in that rely on the historical cost for the construction, rehabilitation, and maintenance of the assets. We check the records of the plans and the costs of rehabilitation, maintenance costs, and so on. However, this historical method, like a straight line or declining balance or sum of years depreciation method, use the original procurement cost. As you can see, they use how much we, as a basis for calculation, use the procurement cost. And the replacement cost method use current replacement asset cost, which is quite different. For example, historical cost of the bridge, constructed, let's say, 50 years ago, and the cost was $500,000. So the base for evaluation calculation of the historical cost or historical method is a 500,000, and current replacement cost for this same bridge could be, let's say, after 10 or 15 years or 20 years, it could be 1.1 million. So this is the base for calculation of the replacement cost method, not the historical or procurement cost. So maybe you want to confuse now, which depreciation method should we use? Let's see the pros, advantages and disadvantages for both methods. Advantages of book method value, let's say historical cost, commonly used for financial accounting purposes, uses historical records of procurement. First, the cost plus any subsequent cost, for example, for renovation or replacing the cost. Depreciated to present worth, to today. It doesn't provide the future projection of the value of the assets. Book value provides direct comparisons in time, series progressions. Data is generally available, but relatively simple to, and it's relatively simple to use. Disadvantages of the book value historical cost does not account the changes in the prices. It as I said before, it only uses the procurement cost, original procurement cost, and neglects the usage, neglects the technology and service standard changes, because the technology and standards, they change over time. And it doesn't, these methods, they usually doesn't count for it. Advantages for, let's say, which we're going to see the replacement cost method, which is mostly used for by asset managers, commonly used in public utilities. They use this method for underground services like water distribution, stormwater or sanitary sewers, also various public infrastructure, the roads, bridges, and things like that. It is quite straightforward. It's not very simple. It's not difficult to calculate. We'll see on that on the next slide, and we're going to discuss about it. Can we communicate? And it's very, because it's very easy to calculate, it can be easily communicated and understood easily. The disadvantages of this method of replacement cost sometimes can be misrepresentative. For example, relatively new assets in relatively good condition would be nearly worth the same as the old or nearly deteriorated asset, but for the short period of time. For example, for the vehicles in good condition, let's say if regularly maintained for the 5th year, it can have the same as the old deteriorated asset, let's say after 10 or if we maintain it regularly. We saw how to calculate it asset book value, those 5 methods used in accounting methods, but let's see how the asset management value calculation is. It's very simple. It's very simple formula, as you can see. It's called DRC, or depreciated replacement cost, which gives us a current value of the asset based on its current replacement cost minus allowance of that captures in deterioration in value to date, up to today. In this formula, RSL is remaining service life or useful life, established as follows. For the assets or the above the ground, which you can see as bridges or electrical poles, by visual assessment of the condition and knowledge of the maintenance of the regime, and for the underground assets by using formula estimated service life minus the age of it. For example, if it's let's say expected service life of 20 years, if the age is 10, then remaining service life is, let's say, 10. That's why because we don't know, we don't see these underground assets. Estimated service life or expected service life, useful life, which is anticipated life of an asset from acquisition or renewal until failure. That's the old period. For example, the roads are usually maximum expected service life or useful life is 50. Well, same or similar like water supply services is 30, 35 years. And in a handbook, you can see a lot of examples. So what is the expected service life anticipated or given the numbers quite used everywhere. The most difficult is to calculate is the current replacement cost. The formula is simple, well, as you can see at the bottom, but the point here is calculating or establishing the unit rate of the asset, and it's very simple. It's unit rate multiplied by modifier and asset data or the number of units. But as I said, the unit rate should include the cost of assets, material and labor associated with it for construction, as well also from the planning, um, time spent on planning, designing, and also supervision cost. And where applicable, um, this unit rate should be include also VAT or value added tax. To calculate the current replacement cost of an asset, first we need to know the unit rate on all the cost per unit to replace the assets, and the unit rate might be the length, let's say, of the road, the area per square meter, the cost per square meter or per length per 100 meters of the roads, or quantity. Let's say we need to know the current cost of the vehicle, let's say ambulance, what is the current market price. And then if we want to purchase the established current replacement cost of all our, let's say, fleet of ambulances, we multiply, let's say, 10 or 20 as a quantity. The unit rate should include, when we estimate the cost of associated with material, plant, labor, engineering fees, administration cost, operational cost, and all other costs necessary for replacement the asset under the typical conditions. Planning also, as I said before, design and supervision cost, and value-added tax. The unit rate is then multiplied by multiplier, we said here, or modifier. Modifier, usually it's initially is 1, or as more details are known regarding the circumstances and conditions of each asset, it can be above 1.1 or 1.2 or below 1, depends on the conditions of the assets. And the value of the modifier can be changed to reflect the cost and impact of the local conditions, which may increase or reduce the replacement of the costs. Now we can ask if we can activate the Zoom poll and see what's the current value of an asset. And we can see on the next slide what is the current asset of an value. For example, if I have an expected service life of an asset of 25 years, as it's shown on a graphic here on the right-hand side, let's say from 1 to 25. Now we are currently at year 20. Then remaining service life is 5, okay? And estimated current replacement cost, which is, as I explained before, it's quite difficult to know or to assess. It's 115 in this example, which is here. What do you think? What is the current value of an asset? Either you can use the formula, or you can look from the graph from, say, let's 20 up to the line and going towards to the Okay, we have three options. Is it 350,000, 300, 250,000? Claire?
Hi,
Thank you.
Vladimir. Sorry, just before we get to the poll responses, there was a question in the chat asking for
Okay.
clarification on the modifier. From your previous slide, what is the modifier?
Modifier, as I said, the conditions could be conditions of the asset or conditions of the external, let's say, environment. For replacement, is it the same? Is it the same as it was before? Let's say the level of service required. You know what I'm saying? If the road, let's say, has the width of the road is 5 meters, let's say, and the level currently now the level of service has been increased by customers because we have more traffic, then this modifier can be adopted, let's say 1.2, 1.3. Okay.
Okay, so thank you, Vladimir.
Yes, all the questions.
Just looking at the poll. So we have the results of the poll, and 54% responded with 300,000.
Can't see the results. You said 30% on 54.
54%.
It's interesting how the others they have calculated, but you can use the formula, for example, for the current value. Remaining service life divided by estimated service life, which is 5 divided by 25, which is 0.2, and multiply by 150,000 will give you exactly 300,000. Probably the others they were looking on a graph there from the slide, and which is very difficult to estimate from the graph without using. But here we are close to there. But exact value is 300 by using this simple formula here. Thank you very much. I don't know how to switch off now okay. Please, we'll go to the next slide now. We're going to have now the breakout and the breakout session in order to calculate the asset value. Most important task is to estimate. Before we go to the exercise, we have to see these methods of estimating asset current cost. In order to calculate the current asset value or the cost, most important is to estimate the current asset cost. There are four methods we could use. For the market price, it applies where there is an active market for the product. Typical examples include fixed plant and motor vehicles, like buses or ambulances, or let's say pumps, water pumps, and things like that, where you have a current market price, and then we can easily estimate it, what is the current cost of our asset. Repair or renewal cost, reconstruct or rehabilitate of asset. It applies where a similar asset would replace the asset being valued. For example, if we have a pipe, which is water supply pipe, which we have to replace, then we have to see the value of the 1 meter, or let's say 10 meters of that certain diameter of pipe, what's the unit cost is, and then multiply it by number of units, let's say 100,000 or whatever meters or kilometers. But it applies where the similar asset could replace the asset being valued. It's not the same. This approach is appropriate where technology is not appropriate where the technology has changed significantly. For example, you can't use the same pipe if we're using asbestos pipes and we want to replace with let's say PVC or other types of materials. This method should not be used. The whole installation is different, the price is different, and things like that. So it's better to use the replacement cost. The replacement cost applies whether the asset is being valued would be replaced by a different asset in terms of scale or technology, having a similar productive capacity. For example, new technology of installation, new modern pipes or new type of bridges, not the same type, and whatever. In both methods, repair or renewal or replacement, we should always consider the principle is called build back better. Whenever we go into the design or consider different alternatives, we should use the build back better principle for resilient to make our infrastructure assets more resilient. We don't just replicate or reconstruct or simply replace. We should think about what other measures should be taken or methods to be used to estimate asset cost, but to make it better than before. There is a recoverable metal. It applies to assets which are not in use. This method estimates the current cost by reference to the net present value of the future cash flow expected from the sale of an asset. It's only applicable for assets which has a competitive market where you can sell it or, let's say, dispose it. Or, for example, if the municipality builds a new office building, then if there is a market, for example, and NPV present value, it's lower than the future, then is the general market exist to recover the amount spent on a building. Can we sell it or just can we leave it as it is? We should think about divesting. Divesting, it is not here on the slide. It's about assets which we pay, let's say, our operating expenses are very high, and we don't use the asset, let's say the building, but we have to pay for electricity, water, or whatever, or the people who are, let's say, safeguarding the building. So operating costs are very high, and we are not using it. So we should think about, shall we divest it? There's some examples in eastern part of Europe where army barracks are not used, let's say on a national level, the Ministry of Defense doesn't use them. So they divest these huge buildings and plots, for example, to the local governments, which can be used for, let's say, economic development, local economic development, and transferring into the, let's say, business hubs or maybe construction of new houses and things like that. So we should think about also divesting on national or local level. If we have a building which we are not using, but paying for the building, but we can give it to a non-governmental organization in our municipality so they can use it and maintain it in the future. Now we can have a breakout and see what do you think, what is the most appropriate method for estimating asset current costs? Cost, we are talking, not value, using these 4 methods. And Claire, back to you if you can explain the...
Sure. Thank you,
Thanks.
Vladimir. Yeah, so you must have just seen a prompt in the chat box about the next breakout group exercise. Please be sure to go ahead and click on the link to the Google form so you can have that up before we open the breakout rooms. Just in case it becomes a little difficult to find once you enter the breakout room and have to scroll through the chat to find the link. But so in this breakout exercise, please introduce yourself and what you do, and then assign a rapporteur. And then on the Google form, there are instructions, more specific instructions, but the basic task is to estimate current asset cost using one of the 4 methods that Vladimir just presented. So again, please make sure you click on the Google form, and then we should be ready to release everyone into their breakout rooms.
Do we have responses now? Can somebody would like to present the results of the work during the breakout session in your room? Claire, can you? Thank you. Can see that we have around
I think we're just waiting for people to
7.
get back into the plenary.
Yeah. Thank you. Yeah. Oh, 78.
Welcome back, everyone, to the session. I hope you all had a good discussion in your breakout room. So we have about around 36 responses to the form. So I would like to call on 1 or 2 people to share their responses. How about Turyahibwa Hani, who was in room 5. We're going to ask you to unmute if you would like to discuss your response. Again, Turyahibwa Hani from room 5. If you're not available, let's go to room 2, Dase Susuka. And you'll be asked to unmute yourself. Please, please speak up if you're there. Okay, it doesn't look like we're having any luck with getting people in. If anyone wants to raise their hand, otherwise we can have a look at the responses. Oh, we have a hand raised by Christine.
Christina.
Christine, please go ahead.
Yes.
Okay.
I was in room
Yes, thank
15.
you.
Hello.
Go ahead, Christine.
I was in room 15, and we chose an ambulance as our asset. Then the method, we chose the market price Then the costs of the assets was 4,054. So that was the amount that we considered for ambulance.
Okay. That's the unit price, isn't it? Or you multiply by needed, let's say, number of ambulances in your municipality or your country. Can you hear me, Kristen? Okay. If we don't have any other volunteers, then we can go on with the presentation.
Yes, let us move on. Thank you, Christine, for sharing.
Yes, thank you. Now we saw the valuation of the assets, is determining the asset value, but we have to also do the asset revaluation. And if you ask why its revaluation is required, that's in order to define the true value of the infrastructure assets. Revaluation of fixed assets is an action that is required to accurately describe the true value of the infrastructure assets in a municipality that the municipality owns or operates. They should be distinguished from planned depreciation, where the recorded decline in value in assets is tied to its age. A revaluation model means that the asset is carried out at the relevant amount, being its fair value at the date of revaluation, less subsequent depreciation and impairment, provided that asset fair value is based on its condition, performance, and value of the assets, then can be measured reliably. Once the revaluated asset, the asset is carried out or the value is carried out at revaluated amount, being its true value of the asset. And then at the date of revaluation, the less subsequent depreciation and impairment. Municipalities need to implement ongoing activity for updating the asset registers, as we saw yesterday. That's a permanent task for it, and of asset registers to ensure that the information they are producing is accurate and up to date. That's why we need to reevaluate in one period of time. If you ask me when we should do it, valuation of the asset is not mandatory at the end of every financial year. Excuse me. Frequency of valuation depends on macroeconomic or situation in each country or market changes. Also, each municipality independently define more precise criteria and defines the deadlines for performing the evaluation in its rule book for accounting or rule book for asset management, if they are using it, but should be used. This means that the municipality will accept the fact that the bookkeeping values of the assets are not in line with their fair value, which very usually it happens anymore. And there are other recommendations from financial experts and auditors that municipalities or public utilities should reevaluate their important assets every 3 to 5 years. Once municipalities should establish efficient asset management system, valuation of assets will be performed routinely each year. That's been done in, let's say, like in Australia, Canada, municipalities there. That's routine work and perform every year, revaluation of valuation. However, then the process of revaluation of valuation would not be as complex as before. Once you start it, you can do it every year, and then you have excuse me, accurate data or accurate value of your asset. Due to accurate asset database, you have accurate data in your database, registers, and asset classification. The question is, who should do it? Who should be authorized to perform the valuation? According to international accounting standards, the valuation or revaluation of the land and real estate is done by certified appraisers of the court expert witnesses or respectively. But in process of valuation of municipal infrastructure assets, property, plant, equipment, and other infrastructure assets, there is no such standard to be applied. So valuation, assessment, and revaluation of municipalities may be conducted by competent team of professionals familiar with the assets, their municipal function and environment. This can be of the part of the maintenance, engineers, design department. Those are the experienced who can perform the evaluation. In any case, all the types of assessment should be done by experienced professional experts with respect to their significance for assessment. If there is no such an expert within a municipality organization, then it can be outsourced or contracted. So I'm sure that neighboring municipalities on a national level can find very easily the experts who can perform the evaluation of the assets. For example, if there is on the next slide, if the one pump station is constructed in 2010 in your municipality with a construction value of $120,000, the residual value here, there on the end of the service life is $10,000, and within of 25 years of expected service life. Today, in the year 2012, we haven't done any revaluation. We waited, let's say, 10 years, and we start the evaluation. And the team of our experts from asset management team went outside and evaluated the condition and performance of the asset, and they came with a report that the remaining service life of assets, it's about 40% of the estimated service life, which means 10 years instead of 40, 10 years. Let's go back. How do we estimate here remaining service life? Very easily. 25 minus, let's say, 11 years from 2010 to 2021, it's 11 years. So 25 minus 11 is 40. But our asset management team, due to condition and everything, they estimated that it's not 14 years, it's 10 years remaining service life. And you can see how the other, the line is dropping down. So, but we need, because this is a very important asset which supplies our, let's say, municipality or part of the town or city, then we call the experts to reevaluate, and they came up with a report, which means to decrease another 10%, which 30% of the estimated service life, which means 7.5 or 8 years remaining. and it's in very bad condition, and it needs urgent replacement. So experts use the method which I've discussed before, which is replacement cost method, and current value of the pump station should be 8 years divided by 25 years times 120. Now it's 38.4. If you can see the difference here, we have 57,000. It's a big difference then, and it's a very big impact on municipal revenue. So the urgent decision must be made for replacement or, let's say, or renewal or replacement of the pump station. Otherwise, if we continue like we have waited 10 years ago, now we can have a problems estimating tariffs and taxes. Plus we're going to suffer. Our municipality will suffer with revenues because of the increased maintenance. We will expect very high maintenance cost and operational cost, which could not be covered by the revenues from the taxes or from the water bills. Now, one of the most challenging areas of asset valuation involves decision on which form of the current cost valuation should be used, a renewal or replacement, or sometimes to have a rehabilitation or reconstruction, which is the same in one word, it's renewal. In the renewal, we think about rehabilitation or reconstruction of the assets. Both methods are essential for effective asset management of assets. However, it's important for each local government ensures that we know, understand the purpose of each valuation, why we have to do it, what are the demands, why we need it. In general, renewal valuation should be used for effective management and decision making in relation with the current cost of the existing assets, determination of the appropriate maintenance and renewal strategies to maintain existing assets at appropriate level of service. On the other hand, replacement valuation is used to determine the relationship of our existing assets to the standard of assets which they will replace it. Also, we need to know what is the current demand of our end users. Excuse me. Also, for the replacement valuation, we have to determine the future replacement of or major renewal programs to set of appropriate depreciation levels. We have to see what's the appropriate depreciation. As you can see on the slide, the replacement sometimes can be very high here. Cash replacement cost very high. Here it's medium, but only for a small rehabilitation of the road, let's say, it's smaller depreciation and value to rehabilitate. It's important that we, as future asset managers or asset managers, have a clear picture what's the current asset depreciation is and the impact that you have for eventual borrowings or rate paying. For example, if we don't have a lot to cover all the depreciation or replacement cost, then we have to say, let's say 50 or 60% of this amount, we have to do the borrowings, but we have to think about the rate paying before moving into the area. Or maybe we can ask for donations, let's say, or grants. But even the grants grant funding can be, let's say, 100%. Each municipality has to contribute, let's say, at least 20 or 30% these days. Quite often we'll be in a situation where the variety of options to recommend to the decision-making final what we're going to do: replace, rehabilitate, reconstruct, or replace the. So we have to do that, like we have these three options on the slide. So we're going to go Mentimeter now, and first question is, what are the other determining factors for the asset valuation and recommending the options? For example, the three options of renew existing road, of the asphalt pavement with carriageway, let's say 5.5 meters wide, with subgrade of 150 of base course, and cost of complete rehabilitation is about 0.9 million estimated service life. And that's this option here, which will cost about 900,000. The other option 2 is to renew complete road with the same carriageway and reconstruct the history subgrade of 150 the base course. So the cost here, as you can see, it's 150 or 1.5 million with estimated service life for another 25 years. Here we're going to have 15 more years. Here we're going to have, if we reconstruct, 25 years estimated service life. And to replace the same road here today, if we want to replace it with a wider, because demand of the traffic now is much higher than it was, let's say, 20 years ago. It's a carriageway instead of 5 meters, now it's 7 meters with 2 meter shoulders. Engineers, they know what the shoulders are. These are the same areas from both sides of the of the road. And we will increase subgrade. The cost of the new, it's estimated almost double than to reconstruct, which is 2.8 million here. The current replacement cost is 2.8 million, but we're going to have extended service life for another 40 years. So we have these basic, let's say, factors. In your opinion, what are the other determining factors? So you should need it in order to finally recommend which are the options to choose. I think it's not only enough depreciation or money needed, or let's say we know the extended service life, let's say, those are valuable parameters and factors, but there should be some other factors. What do you think? Can we have the Mentimeter? First slide, please. Yeah, you have the link in. Yes, it's time, effectiveness, and costs. Do we have any other results? Okay, it's coming now. Costs, technology, capacity, effectiveness.
Please be sure to click the link in the chat to the Menti poll to submit your answers.
Time, nature of asset. Yeah, that's great. We have to know the condition of the current asset, yes. Technology is a very important factor to determine which option we're going to use. effectiveness. Estimated service life, okay, use, which means any other, they say, for demand. Okay, are there increased demands for it, for extension or replacement? What are the other stakeholders think about? What information we have? Okay, now cost, yes, that's a primary factor for determining. And we should also think about, as I said before, how we're going to repay the borrowings and how much municipality has the capacity to invest in a new replacement or renewal, and what we should do. So what are the costs are? How can we cover them? Yes, you're right. So in the next slide, probably we're going to see, thank you for your suggesting what are the determining factors, which most is time, cost, and technology, which are expected at. And probably the key factor of these options is not only what is appropriate depreciation and let's say money needs, cost, as you said, to be spent, but or the life cycle, the time, as you said, perspective to deliver the level of services required to customers. We have to think about that. Therefore, we have to do additional cost-benefit analysis. What option is the best for us? But we won't discuss about this. It's a huge subject, how it should be calculated, this cost-benefit analysis, in order to determine the final solution. So what is the cost and what are the benefits? Benefits to municipality officials or to the organization, plus the benefits to our stakeholders. So those are the two factors we have to estimate. On the next slide, based on this all, if you have all information or factors to determine, in your opinion, which will be your option to choose? Option 1, 2, or 3?
Vladimir, please share your presentation again.
Okay. It's just not there. Okay. Yes, but we need another slide from the Mentimeters. Anyway, yes, the option is rehabilitate, reconstruct, replace. So far, we have, let's say, 20. Most of how the results are going, it's determining factor is the cost, rehabilitation cost, which is smallest. But on the other hand, you have you have, let's say, only 10 years of extension of the service life. So as I can see here, everybody for rehabilitation is the best option. That probably is determined by the cost of the investment cost or rehabilitation cost, the value. It's the smallest. It's about, as I said, 900,000. And comparing the other one, 1.5, but we have extended life of 25. But as I said before, and I'll repeat again, in order to determine which are the options for it and what are the available funds on the market, say grants, or do we have our capacity to pay to repay the loans and to borrowings. Then we have to do the cost benefit analysis. What benefits we're gonna have if we rehabilitate or reconstruct or replace the asset. Thank you very much. We can continue. So nice. Okay, again. Thank you very much for your answers, and then we'll go to the next slide. So, deciding the most optimal best way of maintenance of infrastructure assets is the most difficult task for each local or national government, especially having in mind the requirements needed for operation and maintenance cost reduction imposed by the municipal managers. They always say, reduce the cost on the other side, and customers' demands on the other, especially in the case when the mayors or department managers will like to increase the service of the customer or to reduce the cost, and the customers would like to increase the level of supply and demands to reduce tariffs or taxes. So that's why first we have to know, we have to use right data to determine the most urgent actions is the best way. What we have to do first is to prioritize which are the critical assets. So how it's going to help us with what type of maintenance, control, or innovation, replacement, like we see before, of assets, and when we should do it. Should we wait up to the end of the service life? It's going to be late, or in the middle. How to determine the best combination of cost, risk, and things, similar things to performances and relations to interventions that are taken. So the next step is doing the analysis journey in our asset management analysis journey is to do the assessment of critical assets, as you can see on the slide, on the three steps. The first step is asset condition assessment, where we receive the report about the condition from the evaluators, which says sound and regular maintained, but showing minor signs, delivering good efficiency in minor performance. And then we estimated service life, it's about 20 years left, which means it's in a good condition. And we'd rate it 4 from 5. These ratings, as you can see there in the book, and Ajit was talking about presenting yesterday on condition assessment ratings, and that big table from scoring from 1 to 5, from new up to, let's say, replace it. Step 2 is to see the probability of failure. The main reason for condition assessment is to see the capacity to perform required of level services, and then performance assessment and probability of failure, which we should ask, we should take a report. What about the effective life consumed? If it's 20% of life consumed, which is 5 years, we have 5 years remaining. And we have minor deficiencies, minor defective remaining maintenance is required, and during the short monitoring intervals. It's unlikely to fail, which is our in the report to say that it's in good condition and it's unlikely to fail. But we have also to see the redundancy, or we have to see and ask who was doing the assessment, are there any backup of this these, let's say, as for example, in a hospital, it's very important to have, let's say, backup diesel generator systems. Or in a pump station, we have always the spare pump. One is working, the other one is spare one. So in case of the failure or whatever, the other pumps will be. That's why we have to think, if there is no backup, then we have to reduce the rating. Probability of failure is higher. And on the end, if we see what is the probability of failure, or let's say 2, what are the consequences to impact to, let's say, municipal employees, to the health and safety, it won't have any impact, let's say, consequences. So we rate it 0, and we rate it 4 if there is going to have a, in case of failure, it's going to have a moderate financial implications or consequences in terms of repairment or replacing the asset. And also, we're going to have a scoring 4, isolated service interruption, impairment of service, and related score. But it won't have any environmental impact. So we have scores of asset condition, which is 4, and rating 2 of the probability or likelihood of failure of the asset, which is 2 by 4 is 8, and we simply provide that it's in this scale. It's important asset, but it needs attention for future and determination. How are we going to maintain? What are the requirements for, let's say, increased maintenance if we need it? Because it's important asset, and it has to continue with regular maintenance, spare parts, and we don't require to replace it now, but we require for the next period of 5 years intensive, let's say, maintenance to the assets. Are we going to have another break now, or we're going to Claire?
Yes, Vladimir, I actually wanted to say that we're approaching the 4th hour of the session. So I'd just like to suggest that we have this coffee break, and then there's another section on the risk assessment with a breakout exercise number 2. And I suggest that we conclude after that breakout exercise. Would that be okay?
Excellent.
And then
Thank
we'll
you.
send all the
I agree.
materials to participants. Okay.
Participants, thank you.
Yeah, so we'll have just one more 5-minute virtual coffee break for everyone to get up and stretch, grab some water, and we'll put people into breakout rooms in case you want to meet some of your peers and answer this fun question or just exchange some contact information. So we'll do that for 5 minutes, and then we'll come back for the final part of Vladimir's presentation. Thank you. Right, welcome back, everyone. And I'll just go ahead and turn it over to Vladimir to continue his presentation.
Thanks, Claire. Welcome back. And we're going to go for the risk terminology and risk assessment. Business risk to local government organizations is usually defined as a minor or major uncertainty in relation to the anticipated outcome of a business activity of a local or national organization. So as a terminology, the term's risk is effect of an uncertainty on objectives, which is defined by ISO 31000. To assess the business result, is a leverage of method is used for the so-called fixed factors, fixed cost, respectively, of business municipal expenses. And therefore, the business risk must be defined as an uncertainty related to anticipated business and municipal revenues. And therefore, the business leverage in that case implies identifying a business risk factor that may influence the revenues and anticipated level of services respectively. And asset level of services and asset threats or risks have been allocated into three general categories. What is the asset condition, which is the physical state of the asset. We see the factors that impact the condition of the asset include physical state like cracks on the bridges or on the roads, collapses on some, let's say, retaining walls, wear of the pipes, potholes, etc. And asset performance is also the second category, which it's a condition related to adequacy of the assets to operate and function safely. And if there is no backup, for example, for this, then the performance should be rated, as we said earlier, lower efficiency and effectiveness. Also, on the third category, exposure to hazards. Hazards can be natural, climate change, which we're going to see on the next session with Dustin, who's going to present all this I think in 2 weeks' time. And man-made causes, which are technical faults, all the terrorist attacks and things like that. So we have to assess all these general categories on to a level of service. So how do we do the risk assessment? Risks can never be fully eliminated, only managed. So risk assessment or criticality of infrastructure assets determines the level of probability assets could fail. Because of the risk could be managed and mitigated, we have to assess and determine for each asset category how old is the asset, what is the, for example, asset life, estimated service life, or remaining service life, which is more important. And then what is the asset condition? What is the condition through regular site inspections and reporting from these inspections? What is the asset failure history to see in the maintenance books? How many times per year this asset or per month, per day fails to operate, which is asset performance through maintenance history we should see. How likely is to fail again if we have a bad history of performance, asset is failing periodically or frequently, then we have to note it. For example, to replace or spare pump or diesel generator, if there is any diesel generator, as I said, in a hospital for operating rooms, or diesel generator needed for the wastewater treatment plants, spare to frequently operate the wastewater treatment plants. What are the consequences, which is we have to determine of failure to public health and safety, level of services, what are they reduced, financial implications or consequences, environmental to the environment, and also to public perception. If this asset fails, what the perception will be to municipality or the public utility in the eyes of our customers. So requires expertise and input of the asset management, but also from the stakeholders, from strategic insight by municipal council, senior leadership. We need insight, expertise, and input. Financial department experts and managers. We need it by also from the tactical insights we need from the infrastructure land use planning for the future, how our municipality will be developed or town. And from engineers, we need insights, operations, maintenance experts, and things like that. So when we have, let's say, critical assets and risk assets, we have to prioritize them. Next, how we should see the risk versus asset level of service. Whatever higher level of services we have a lower risk probability to fail. It's low because we have a high level of services, but that requires a higher maintenance cost, as you can see on the graph here. So with the high level of services here, we have high maintenance cost, and due to the time, the level of services they go down, then we have a lower level of services, but higher risk of exposure, of increased probability assets to fail, and lower maintenance cost. And then how are we going to see the optimal impact when we have to do? It's when we add two simple things, I mean, maintenance cost and exposure to risks. Then we see the minimum, but the optimum way, or when we should invest in maintenance or replacement cost is 1 or 2 years before the risk can happen, or the failure could happen with the consequences. So how do we calculate risks? It's very simple formula. It's business risk exposure, which is business running cost. It's equal to failure of consequences multiplied by failure of probability. It depends on the age, condition, capacity, and hazards. So I'm sorry. Risk assessment metrics. Probably you have seen these metrics so many times, and this is in the middle. This metric, which is part of the consequences and likelihood to happen or probability of failure. So we have for consequences, we have to consider insight statements from the customers, which are the consequences to their health and safety, level of services impact on what the consequences will be to environment, to natural and physical environment, depreciation, the organization, financial costs, which will have implications, consequences to financial implications to municipality or public utility, and what implications or consequences to operations. Then we have to see the probability or likelihood for failures due to the condition and degradation of the assets. Also the implications from the maintenance, or how the inspection has been done on maintenance, organization and reliability. That we can see from failure history. It's also important to determine the failure probability. Detailed, reliable information, data actually for failure history on an assets we should see the type of failure. Is it mechanical failure? Is it road pavement cracks, pipe bursts, and cause of the failure, why it happened, circumstances and reasons that caused the failure, inspections of cases. All these inputs, we're going to rate them in these metrics. And then we have to see in which area they're critical, if if we multiply, let's say, from the previous exercise, what are the critical and risk assets. And then we have to do the prioritization of this, starting from the high risks and critical assets, which we are in this area here, and renew. Now we have to ask ourselves: do we renew, replace, rehabilitate? All these questions we have to do. How much money it will cost? What the depreciation will be in the future? What's the future? What's the future expected service life and things like that. Also, it's very critical here on this area where the assets are ranked as a priorities. These are also important type of assets in this area where we have a moderate impact. And this will give us the answer how it should be maintained in the future, what costs or expenses will be needed in the future to provide the same or improved services. And when we have that, we should think about how to design and construct, how much money we needed for it. It's not only to build, but also to design, having in mind build back better principle. All these questions and all these things we have to think about, very crucial thing, how we're going to ensure or achieve sustainable asset infrastructure in order to answer sustainability to our customers, environment, organization, as a municipality, to reduce the failures in the future and to be an effective method for inspection and reduce disasters in the future. And we can see now go to the Mentimeter, number 4. Can have quickly some exercise which can, on the hospital asset, on the hospital we have 6 statements about some assets which are defined with the simple sentences. And then you have to rate them probability and consequence. Can we have the Mentimeter, please? So you can cast it into the chat, please. Can we have a link? Yes, this is the link for the next activity. So if you open it, so you can see there are the 6 statements there. One is about intensive care unit, about respirators, describing the condition of the respirators. The second, I think, I don't see it now. The second is about diesel generator for the hospital, ambulances condition explained. So each of these, yes, here it's coming. Yes. I saw it's an intensive care unit, which is part of the hospital. So for each of these, can you please answer, rate them? Main elevator or the lift is in a good condition. Increased service interruption, impairment, over computer tomography. It's a CT scanner services, which is very important. But it's isolated service interruption. It's not frequent. Roof cladding or rooftop is renewed, let's say 2 or 3 years ago, which is, you can say it's in a good condition. And first aid vehicles they're in a fair condition. So please rate of these all 6 statements the probability of failure and consequences if they fail. Can you? Yes, we have, let's say, number 1, it's in all the results are here, or do we have, okay. Number 2, let's say backup generator, it's going to the, let's say, risky area. Number 3, main elevator is in good condition. It's in the area where number 5, actually, roof cladding, which is okay, which is has a low risks. The higher risks are 1 and 2, which is respirators and backup diesel generator, which I expected. So this is, thank you. Oh, we're going to add, close number 6. First aid vehicles in fair condition, which are in moderate or medium risks. Now you have risk ratings in consequences and probability or likelihood of failure. You can write down what you have rated and how. Let's say 1 and 2 are most critical and risky. 4 and 6, they are here. So on the next slide, probably, don't forget now, it's when we have that, what the priority will be for your actions. What you're going to do first, second, third, and up to 6. What's the last one? Excellent. So how shall we prioritize critical hospital and risky assets? For example, okay, let's see. I will expect that we'll keep these ratings. First is the respirators, then the diesel generator. Yes, okay, results are coming. As I expected, respirators in intensive care unit are very critical, especially in this period of COVID pandemic. Also, yes, okay, also needed for the hospitals and this backup diesel generator is going second. Okay.
Just
Hospital.
in case people are not sure how to respond to this poll, just it's in the same link that was in the chat, but you might get a message at the top saying to go to the new slide, which is for this prioritizing assets. So it's the same link as the previous poll. So we have about 10 responses in right now. Sorry for the continue.
Yes, we can end up. I was expecting that intensive care unit and backup diesel electrical generator. It's on second place. Needs attention for replacement or intensive maintenance measures. And the question is, do we have to buy the new or replace the ambulance vehicles? Main hospital elevator is in a good condition, so that's why it's in the fort. We have to keep it with regular maintenance activities, but also because there are the isolated interruptions of CT or computer tomography. It should also continue with regular regular maintenance and replacement of spare parts, which the manufacturer they always recommend when the part should be recommended, so we know it in front. Roof cover, it's been done, so we don't have to carry it. It won't leak during the rains or have any consequences. Thank you very much for your answers. We'll move on now to the presentation. And I'll go through quickly of the analysis for the long-term and asset management plans, financial plans. And I'll leave the time for presenting the Excel tools, templates, which provided for each stage. So it will be most interesting for you, I think, waiting at the end of the presentation. So I'll skip some of the subjects. Can we go back to my presentation? Or? So again, yeah, finally. Sorry about this. Yes. Many monitors, so I'm confused now. Analyze this for long-term asset management plans. Once we have information about asset value, what's the cost, current cost is current value of our assets, and then we prioritize what are the critical assets and everything. Now we have to perform short and long-term plans to replace some critical assets, to plan about the future maintenance in this short period of time of 1 to 5 years, but also for the period of up to 10 or 20 years. So analyze this minimizes the asset life cycle costs for determining the level of services during this period. And it can be also provide critical expenditure for projections of input and long-term asset capital investment plan, or how much money we will need for, let's say, after for in a period of 10 years. Asset management plan versus capital investment plan. It's asset management plan is a full plan of asset capital and operation and maintenance requirements. So includes the total asset needs, maintenance priorities, cost, and costs. It tells you what you should do. Asset managers, and asset management team give the information to the mayors or decision-making people that this is what we should do, and this is how much money and cost for replacement or maintenance we need for the future. And capital investment plan is what is feasible. Let's say we got a back information from the managers or from the central government. No, you don't have a capacity to do that. This is the investment of your internal capacity, what we can do. And it gives an answer what you can afford and to do realistically. So these two plans, they have to be combined and together, so to fit optimal level of level of services. So it's important to see when we have in the long-term planning, when we see in the future, we have to see when is the optimal period for replacement or renewal of the assets for the next period of time, let's say 10 years, starting from today. And how do we calculate this? We know that from the blue line shows the operation and maintenance costs, which are increased in the future, and how it's calculated. It's calculated the current operation and maintenance cost, but we estimate present value or net present value of the future. And as we can see, that's increased during the, let's say, next period of time. On the other side, it's if we know current value or the depreciation replacement cost today, we know the value of the depreciation or the current value of the assets they depreciate, and how we calculate it. It's the same method but opposite. We see that what is the net present value or present value of the future, but we can see it's declined during, and that's the method of declining. So in the formula we are using on both cases, it's the formula is for present value, net present value. It's we must use discount rate. It's the interest rate which the national or central bank lends to commercial banks to meet their liquidity needs on banks. So we have to see that we calculate with the discount rate. So all the national central banks, they give a reports what's the current discount rate, and then we can calculate by the formula. So as I said, if we add future operation and maintenance cost and depreciation cost in the future of our asset, the optimal way is similar like on the risk assessment. In this period, for the next period of time, it's too early to invest. It's still early, let's say, second or fifth year, but the optimal where the minimum is a year before, year after, or 2 years before, 2 years after. After that is late, or on the end of the service life, let's say on the 10th year. Too late, and the problems will come. We'll have a liquidity problems. We'll have operation problems and things because the revenues won't match the operation and maintenance cost. So simply, it's long term. How does it look like? For example, this is the short period of the next 1 to 5 years. 1 to 5 years. So we can see what's the priority critical assets with this color for each year, and also operation and maintenance cost. So you can see that they are dropping down after the third. You can see on 2023, because we have replaced or renewed, we have invested in replacement, and then slowly going up, and then we build the new assets. Also, the operational cost will come up. This is the Excel file, and there is a problem here. In a period of 5 to 10 years, we have unrealistically asking for more funds here. So in that period, probably we're going to have borrowings, and you can see either it's going to be loans or the decision making. What's the internal generated funds? It won't be enough to cover all the expenses in this period, so we'll need the borrowings. But after the 9th or 10th, let's say, yeah, we are okay. We can generate enough, let's say, cash, so we can repay the loans, but not all of it. Just it will left some for the next period. Skip the let's go quickly to key performance indicators and why it's important to have for evaluation and monitoring purposes of asset management information system. Key performance indicators are valuable information for reporting asset management sustainability that will enable to managers to measure and report effectiveness of asset management plan and the targets outcomes annually to decision makers. So decision making take place in the various stages in creation of delivery on asset management plans, which is illustrated in a graph there. So it's just in the stages needed for asset management policy. We're going to give the information to the decision-making criteria listed here, and then we'll have a full asset management strategy and objective set in the asset management strategy, but also in the asset management plans for capital growth or capital renewal, operation and maintenance cost. This is part of the asset management plan. We have to give the information to the managers, what we have to do, and they're going to tell us what we can do, but then we can incorporate that in an asset management plan. But also it's a reversible project, delivery of the plans. We get information from the managers and then we put in data and vice versa. Then we have to provide adequate information for delivery of the plans in time and money. For measuring the municipal development index, there are many indicators related to the infrastructure assets. And as you can see here, we have divided into pillars, sub-pillars, and indicators. There are many indicators how we can measure the infrastructure, but all the infrastructure related to economy, health, education, social infrastructure, sport infrastructure, safety, environment infrastructure. Infrastructure systems, which are in this level, in pillars level, have an impact on achieving 95 of all sustainable development goal targets. So infrastructures, all these infrastructures, we have to measure in order to achieve the sustainability of our municipalities. So I'm going to show you some what is needed, what information, and how do we define each composite indicator. For example, if we have to define a road paved in our municipality, pavement of the roads, which is percentage of the total roads in our municipality. We give the name of the indicator. We provide a clear definition, method, how we're going to measure, and source of data. So this is valuable information. And I'm going to skip for measuring our plans, there are three major performance indicators. First is asset consumption ratio, which is a ratio between the sum of depreciation to replacement cost versus the sum of the current replacement cost. If this ratio is less than 50%, then it's going to give us a signal that we have a rapid deterioration of the assets. And if it's above of 75%, which means that we are over-investing in a renewal or replacement of the assets. These are these three indicators are taken from example from Public Works for Engineering in Australia, and it's a regulation number 50, but they are set very high. For our countries, probably they have to be reduced, yeah, because that's in between 30 and 60, they should be fine. Next ratio is it's called asset sustainability ratio, and how to calculate. It's a sum of the capital expenditure, I say capital investments for replacement of renewal, and divided by depreciation expenses. Again, if it's acceptable ratio, it's between 90 and 110. So with our capital investments, we should cover those capital investments either from the grant financing or from the borrowings. We should cover like at least 90 to 100%. Above 100, 110, the government may be over investing in renewable, but we have to see it first. And on the end, it's the asset renewal funding ratio. If we are okay with the previous two, definitely we will be okay with this asset renewal funding ratio, which is the ratio between the net present value of the plant capital versus net present value in the future needed for the requirements for capital investments. As I said, in between 90 and 100%. If we are setting up, next slide. If we are setting up, for example, this is the example of Excel file, which I'm going to present them now. How to measure, for example, for the roads, if you're going to tune up, let's say, what we need, which is total here, and capital investments in following years, in the next years. So you can see it covers about 96% capital investments and what we plan for the rehabilitation, for the critical infrastructure assets, priorities for this current next year, and also new assets, and also these are the sum for the renewal or replacement. So this total, and we put the amount, and we see if we're going to get all these three. Now I'm going to present, which I was talking about. This, sorry, I have to open them now. So.
Vladimir,
Yes.
just to clarify, are you now moving on to the a short
Yeah.
presentation of the Excel templates?
Yes.
Okay. And I think after that, we will wrap up. And there were no other breakout activities, right?
No.
Okay.
Because we are in a 3.5
great.
hours. So let's see the first depreciation methods, how we calculate them. Why? And we have here, for example, inputs. Here, asset type, can you just say, let's say a building and purchase cost, 20,000, depreciation years, let's say 30, and
No, we can't see your spreadsheet. You're still seeing the slides.
yes. Oh, sorry. Okay. Yes.
Thank you.
Great. So we have input data here, buildings, purchase cost, and here, if we change any of these, let's say, purchase cost 15,000, we invested. So automatically we'll give you the calculation here, so you don't have to do the calculation by the computers. Or depreciation years, for example, if it's 25 years, it will reduce automatically. Give you the graph here, and presentation of how much is, and also indicates you in red what is the current year. this you can use for the same for the all 5 methods here. Let's say here also this in for example lab equipment 2050. If we change the price, say 5,000, automatically it will change the depreciation rate. It will stay, but depreciation years, if it's more than 7, let's say 10 years. Okay, it will give you the today book value, and opening book value and depreciation at the end. So this also the same for the, let's say, the other method. That all these methods are here. Most important, most interesting is this one, sum of units. For example, as example, we have for the wind farm of 300 million. So I didn't put million, but just 300. So this is the input here. But we also, if we want to continue, let's say for the next year, for current year, if we have information, let's say 30 kilowatt, it gives you exactly or year after, let's say 40 gigawatts per span, and also remaining units it's going to give you in green what is the remaining of these 550 total units just spent now. Okay. Asset valuation, which also the first one is simple instructions, and simple instructions here. Pump station, for example, which we have the example, estimated at 120, constructed 2010. And here on the white cells, here you put, let's say, what from this table, you put, for example, in between, now it's estimated 40%, which is in this category poor. If we change it into, let's say, 50, let's say it will automatically change you the remaining service life based on asset assessment. So it's improved instead of 14, 13, and so on. So, but you can also see the table and graph, which are presented in two values. Let's say we have a straight depreciation, 2 methods actually. Straight line gives you the current year, annual depreciation and accumulated. And you can see the difference here, 48,000, similar like we have. And this is also useful how to evaluate or evaluate your assets. And the latest, but
is that everything?
Yeah, one more.
Sorry.
Decision.
Okay.
Asset management plan. Yes, if we have for the, let's say, for the roads, and this is the input data. For example, here I can put critical assets, priority critical assets, what has been estimated for the roads, and a discount rate of 3%. If this can be changed and automatically change the net present value of the operation maintenance. 25. And gives you different story here in the optimal, and give you the different plan for, let's say, so if we change here to, let's say, current value of the assets, 9,500,000. Or whatever, it's small. Whatever, 50 million, then you can see where when it's. So if we have water supply, wastewater, And now it's interesting, which I said, automatically when you have the water supply plan for let's say reconstruction or rehabilitation, then it gives you automatically the index and indicators how good you are. On the end, as I was talking about, it gives you asset management plan, what we need. It gives you these graphs there. Whenever you change on the previous, it will automatically change there. An asset management plan is what we need and what we can. This is the inflows, outlays or inflows, which the company or municipality has the capacity to invest, and what's the real one. So, and you can see if we change something, and here it will automatically change. This should be all from me, and I will give the word now to Claire to close up the session, and I will stop sharing the screen. Okay.
Thank you so much, Vladimir, for such a detailed and quite technical presentation. So I think a lot of participants will have taken away a lot of concrete techniques and methods for calculating depreciation, reevaluating their assets, and so forth. So thank you very much again for that. And want to also say another thank you to Ajith for his presentation yesterday. As we have mentioned in the chat, everyone who attended today's workshop and has registered for these workshops will receive a follow-up email with recordings for this presentation, as well recordings for these 2 days of sessions, as well as the the presentation slides that you saw. Just to wrap up this thematic ground on data, I just wanted to share a couple of key takeaways about asset management data that is actually in the handbook. Let me just read those out to you as a wrap up. So, a systematic methodical approach to data collection will result in a more effective and robust asset management information system, as you were presented on yesterday. And this system will deliver reliable information that's necessary for sound decision-making and ultimately for improved service performance of your assets. Also, having adequate data on the location, condition, performance, and finances of your assets allows governments to anticipate the resources that need to be set aside for repair, renewal, and replacement over the long term, particularly for critical assets. And then final point, ensuring the accuracy, quality, and quantity of asset information is a collective effort. However, the costs of collecting, validating, and maintaining data should not exceed the value of the information that you get. So that kind of is another point or a reminder of the message from yesterday, that you should always set up your asset management information system based on the use that you will get out of it, and to make sure that any effort that you're putting in to collect data is a good investment in terms of the benefit of that data that you're collecting. So as you can see on the screen, we have the new handbook we've mentioned several times now, and this specific topic is covered in Chapter 5. And we also welcome you to revisit the topics that were covered in the first session presented by Linda Newton in chapters 1 through 4, and also to look ahead to the next round of workshops on crisis resilient asset management, which is covered in the later chapters, in chapters 6 and 7. So those next workshops will be coming up at the end of this month on the 30th and 31st of March at the same time. Please be sure to, the same link, the same Zoom link will be used for this workshop. So please make sure to save that email somewhere, that confirmation email, so that you can easily access that link next time around. And just a final point, I think, is on the homework. You'll get more information about that also in the email, but today's homework is actually just a very straightforward exercise, which is to collect 5 data points on the priority asset that you've chosen in your asset management action plan, which is the round one homework assignment. So 5 key data points. Again, this information will be repeated in the email, but yeah, just building on the homework assignment from the last round. To collect 5 data points and trace the data that you have as far back as 3 years ago, if possible. I think that's all from me. I want to thank everyone again on the whole team, especially, not especially, but everyone really, the presenters as well as the technical support team who has really made this all possible. Helped support all of the Zoom polls, Mentimeter polls, and we hope everyone had a nice and interactive engagement with this presentation, and we'll see everyone on the 30th of March. Thank you.
Thanks for me also. Thank you for attention.